All right, we've got another day in the books here, and what a winner! Yeah, baby, up $1.39 for a return on equity of 0.07%. You may be detecting a little bit of sarcasm, and you are right. This was not the most exciting day. Once again, it's been a really dead one. But on the bright side, about 8 minutes into the day or something, it really looked to me as if I was going to be closing red today, about $50. That didn't happen. I ended up recovering the early loss that I took. Both trades should have been the same. They weren't. So we'll take a look at exactly what happened and see if there's anything we can learn from it. So before I get into the trades, I just want to mention that there was some important behind-the-scenes activity going on leading up to this day. So last night I went out to a friend's place and we hung out for a bit and started, having a few beers. And a few beers turned into a few more beers. And by midnight I was thinking, okay, this is pretty much my bedtime cutoff here. And there's a good chance history will show that when I'm in this situation, generally I wake up feeling terrible the next day, or at least not 100%. And I knew at midnight last night that the chances of some hot market being waiting for me in the morning was very low, and that I would probably fail my pre-market discipline routine. That didn't end up being the case. I went to bed around 3 a.m. and I woke up naturally at 7:30, and I felt great, and that was a nice surprise. And my disciplinary routine pre-market, everything went well, and my checklist was all falling in my favor. And so instead of having to just have a day of practice trades, I was able to take some in this account. It was a day that almost closed red, but I did, like I said, I recovered. So I'm going to run through the details of these trades a little bit and then talk about them, what I think about them later on. So on my first one, I jumped in on this candle here, anticipating a high of day breakout. As you can see from this week open, this was a red to green move. And I took an entry at what I had intended to be 846, but what ended up getting filled at 851. So that threw me off a little bit. Following some consolidation, there was a false breakout here, and that false breakout triggered a breakdown all the way back down to 15. With my stop being at 20, I bailed out as soon as that 20 level was broken, and I promptly lost about 36 cents per share, I think, after commissions, and that put me in the hole by about $45 at that time. Now, after just kind of being choppy for quite a bit, with the exception of this large breakout that came kind of out of nowhere, it did curl back up and made a high of day on this candle at 873, and then started stair-stepping back down. And what I find myself looking at was the second bounce off 820 right here and here. And there was a pinch, sort of a tug of war happening in between 830 or 820 and 835. There was a fairly large seller at 835, and I thought that given the thickness of the level 2 and several other factors, that I wanted to get in for another possible high of day test, and I wanted to get in early. I wanted to correct my earlier mistake of waiting for too much confirmation, which basically gave up the whole move. So I took, once again, starting with 125 shares on this next candle that broke 835. I did jump the gun. I'll get to that later. And took 125 shares at 840. There was a bit of slow kind of consolidation for a little bit. And then we finally got a good breakout where I added another 125 shares at 850 to give me an average of 845. There was then this period of consolidation with another breakout coming shortly after. And I ditched the whole thing at the top of this candle, getting very close to a top tick, exiting the whole position at 866. And that's the end of the day. Those are the only two trades I took. Now, the first thing I want to talk about of my first trade was a bit of a lapse in concentration on my behalf. I had the 1 minute chart zoomed in about this much at the time of the open. And as a result, this is the line that I had up at the time, or one of them anyway. I also had one at 855, I believe it was. And this is what I thought would be the most logical place to risk off of had the stock squeezed up out of the open. Now, that didn't happen, and when it broke down, the mistake I realized as soon as I closed my first trade was that I'd failed to acknowledge the support line down here at 820, which had seen several reactions pre-market and was the base from which this stair-stepping up motion took place pre-market. And that was something that ended up costing me pretty much my whole first trade, because if I had been aware that there was a much greater chance that I would have jumped in probably on this candle here almost right away as it broke the high of the last one. And that may have led to me having a small winner as opposed to a fairly large loser in terms of pennies per share anyway. The second thing I want to talk about was how similar this trade was to my trade yesterday on AVYA, where as we tapped 860, I had a read. I got information came at me from the tape and the level 2 that was screaming a reversal is coming. And unlike yesterday where I did listen to it and I did immediately jump out of that trade and as a result saved myself from a red trade that I would have stopped out of, I didn't do that today. I hesitated quite a bit. I was thrown off by my high fill at 851. I had intended to get in at 846, and just the speed of the ramp up on this candle here made me get filled at 851, which, because I had always planned on risking off this 820 level, it threw me off a little bit, I must say. And I had several ideas throughout this trade of I should get out. I thought it probably 3 or 4 times in this trade, starting on this candle, that, okay, this isn't going to work. This isn't going to be what I thought it was going to be. And I should just bail and reevaluate and wait for more information. And, you know, you can see it kind of based out. It hit 39 again, which was the low of this green candle. It then hit it again at on the next one and got bought up right away. And I thought, okay, this is a decent place for a primary stop to be installed here. I should probably, you know, install a second stop like so and use this 39 level as, you know, the spot where I start thinking about bailing. And even though it would have been a red trade anyway, it wouldn't have been as much. And, you know, a penny saved is a penny earned. And surely enough, once that level broke on the next candle, it even though it did pop back up, the price action on this candle was nowhere near as convincing as it had been on these 3 running up. And so what I ended up doing is I held on to my initial stop, my hard stop at 820, and I wrote it all the way down to 820, even though it looked, you know, all the information was screaming at me, this isn't going to work, this is going to go all the way back down. I didn't want to exit on such a small position. I didn't want to get scared by the price action level 2. And looking back, I'm not 100% sure. I'm still on the fence of whether I should have got out right away, and if so, where. Should it have been in the 50s? Should it have been at the break of 39? Should I have held it a few pennies below 820? That one I don't think was ever a good idea, even though it did bounce off 815. And so just, I don't really think there's all that much of a lesson in there. It's just an observation that I made because I found myself in a position in a trade where I wasn't super comfortable with the situation, and I let myself fail to do something that I'm really strong at, which is identify a pending reversal. Now, my second trade, I think, was the result of a really good series of adjustments that I made leading up. In between my first and my second, I really took some time to reevaluate. I was keeping a really close eye on the tape. I wasn't really watching anything else in the market. I did have my eye on a couple things, but it seemed to me that if I were to take another trade, which I wasn't 100% sure I would, but if I were to take another, it would most likely be on this symbol. And what I talked about earlier with my preemptive fill, I did it twice. Both my entries, all my entries today, all 3 of them, had problems. And the one right here at 10:07, that was me. It was the opposite of what happened on my first trade. I tried to get in at 841 for the break of 840, where there was some sellers stacked. And the same thing happened at 850. And both times I punched the buy key a little bit too early. And as a result, I bought at 840 and 850 instead of 841 and 851. Now, pretty much as soon as I added at 850, I moved my initial stop and I installed another one. And I've illustrated that here using these yellow lines. So as soon as I added at 850, I moved my primary stop up to 840, which had been the previous resistance level, and my hard stop had moved up to 831, which had seen some reactions back here, right here and right here, and was the base from which this volume explosion took place. And I really wasn't looking to be as patient, anywhere near as patient as I had been on my first trade. I wasn't going to let this go super red on me. I was going to lose a couple of pennies maybe. And that part I really like. I feel I tapered the risk very well. I dealt with the situation pretty well. I think this kind of trading that I've taken today and I took yesterday and a couple times before, this isn't where my skill set really is. I'm not really good at these red to green moves, and yet the market has been forcing all of us to really go outside of our comfort zones and try to find setups that we wouldn't maybe normally be too excited about. And this was really one of those situations. So went into this as soon as I had very little patience for a pullback. I mean, this volume spike was really intense. The price moved up very quickly. There was almost no chance to get filled higher up, even though I didn't want to. There was some selling stacked at 859, which later broke. You can see here it pulled back, and this is a reaction to the selling at 859. There were, I think, around maybe 20,000 shares at 859. And the one thing I did like about this situation was how it was forming a bit of a pennant above my initial stop. And I thought, okay, this looks in a bull market, in a really hot market, this kind of pattern. I mean, this is breakout central. Once the high of this gets broken, I mean, this is a great pattern to get long. And I thought, okay, I'm going to hold through this very happily, and let's just see what happens when it retests 59. And when it did, it broke through a little bit, pulled back, but it didn't pull back with the same level of aggression that it had on previous breakouts, such as here. And so I was happy about that, and I thought, okay, well, maybe the volume will come in. Let's give it a second, see what happens. I'm not going to jump the gun on bailing or anything like that. And on the next candle, it did break out, but the reactions that I saw in the middle 60s and the way that it broke 59 told me that it's probably not going all that higher. And I had maybe a second and a half to figure out what I wanted to do with this, and I did decide that let's just try to get the highest fill I can. My initial profitable failure target was 860. That's what I was thinking when I got in initially at 840. Was okay, first target's 860, and second target's going to be high of day, and then the back of the mind target, we don't even have it mapped out anymore on the daily, but it was 950 was the daily resistance level that I was looking at. And that's where I thought, okay, if everything goes really right, if I end up being able to load up on this stock, then I'm looking at between 925 and 950. Now, it's kind of easy to laugh at that in retrospect, like what an idiot. He thought there was going to be a stock that moved up 75 cents, and that's just a sign of the market we're in. It's a really weak one. And to be able to land a 20-something cent scalp like this, I mean, I'm pretty happy with that. I'm especially happy with the fact that I used a trailing stop on this. As I've mentioned several times in the past, I never use a live stop order ever. I trained myself to use mental stops about a year and a half ago, and it was one of the best things I've ever done for myself. And if your reaction times are good enough and your level 2 reading skills are good enough, I think it's the only way to go. Past a certain point, you got to take the training wheels off. And in this case, I used the type of stop that I don't normally do, which is a trailing stop. And it was a really aggressive trailing stop. It wasn't one where I was basing my positions entirely on the level 2, or on the chart rather. You can see here, this is the stop that I started with. But as soon as we broke through and we started moving up, I moved my mental stop along with whatever was presenting itself on the level 2. When there was bid support coming in, I would think, okay, that's my new primary stop. And then we'd move up a bit further, and then more bid support would come in. Okay, oh, that's my new stop, etc. And I think that adjustment really saved the day, literally. Part of the reason that this trade was so green was my reaction time, and this is definitely one of the times where I wish I had the disk space to be recording all of my sessions as I used to, because I would definitely insert a live video and do a little bit of bragging here on my reaction time. I'm pretty sure it was in like the low, maybe 0.1 or 0.15 of a second, something like that. And as a result, I almost top ticketed it. Once again, like I thought on my first trade, like I thought yesterday on AVYA, this was a case of me seeing the signs of a reversal, getting out before it happens, and getting a really good fill. And you can see I was right. The reversal didn't happen quite as cleanly as I had thought it would. But as you can see by what pretty much all of us in the chat room decided was the death candle, This breakdown from 855 was just super harsh. And I didn't stick around for that. If I had held on to my stops at 840 and 831, well, this would have been another red trade. And that would have not necessarily annoyed me, but it certainly would have hurt my account. And instead of doing that, instead of closing down maybe $80, I ended up, scavenging $1.39 today, which is a super funny P&L. But given the share size I took and given the whole situation, I'm really happy with it. So I'm going to close this video out by offering a look at my updated trade log here for 2019. Nothing really much has changed. If I were to look back on the trades from today, I really like the pattern of one entry, one exit on my loser, and then two entries, one exit on my winner. And like I stated just yesterday, I really like to scale into positions. And even though I suffered a really tough loss here in terms of pennies per share, I also think that these two trades put together really demonstrate the strength of a style that I have of scaling into positions in weak markets or in high risk situations. So you can see that I lost 4.24% on my investment in this stock on my loser, and then I only made 2.21% back on my winner, and yet I covered my loss of 4.24% with my 2.21% winner. And what I think that really shows, although not quite as clearly as it will in a hot market, is how I'm able to taper risk by scaling into the position. I think this is something I do really well, and I think it's something that lately has been saving me from a lot of bad losers. And I don't think we've ever seen so far, maybe that one long up here on AVDL was a half decent example. I do have a couple of practice trades, like TTPH was a scale in that was super safe. And even though the trade itself was sketchy, I think once we get into a hotter market and you see me really, taking like 4 or 5 entries on a particular trade, you'll be able to see that even a winning situation, my risk reward is affected very deeply by this style. So I only took 125 shares and I let them go down, 33 cents. And I only suffered a loss of $45 on that. And yet my winner, I only captured 18.6 cents. And, I was able to recoup all those losses. And in situations when the stock keeps running and I keep adding, well, you'll notice that my losing situation, I mean, the risk reward ratios that I sometimes get are, double digit to 1. I'll sometimes get 10 or 15 to 1 of, a max loss, like that is my first entry versus my first stop. And then all the different situations that could arise from taking trades in this way, it really allows me to taper the risk and to enter less reliable setups and to anticipate breakouts more than jumping in at high of day once it's already been broken and things like this. So even though this day was more or less pretty boring and pretty dead day, I am really, really happy about the way that I adjusted from one trade to the next. And, you know, I think you could argue that, well, maybe I got a bit lucky. Maybe this thing shouldn't have run. Maybe the factors were bullish, even though bearish rather. Even though I disagree with that, I think this stock had a lot of things going for it. And its failure today was just a case of really weak market and hesitant traders. We saw a couple of breakouts. They didn't really work. A lot of them were false breakouts. And despite all that, I still managed to pull out a green day, and I'm really happy about that.